Welcome back. I'm happy to see that you guys made it here, that the snow didn't scare you, which is a good thing. Always. So I'd like to start the class with the review, as always. And last class, we concentrated on the topic known as exclusions, okay? So very important topic because these are the items of income, right? Items of income which the government says we are not going to tax, okay? So very, very important. And of course, because it's so important that you could receive value and pay no taxes, the government, when making these exceptions to the rule, right? Because the default, we said whatever you get generally is taxed, right? So in making these exceptions to the rule, the government needs to be very careful and very strict so there is no abuse, okay? So we started with the most basic exclusion, that's gift, right? And we said in order for a transfer of value to qualify as a gift, we need to look at the state of mind of, whose state of mind? Donor or donee? The person who gives a gift or who receives a gift? Who gives a gift, makes a gift, that's donor, right? So we said in donor's mind, right, it has to be done out of disinterested generosity, love and affection, okay? If there is anything outside of this, hidden value, whatever kind, except for, of course, feeling good about it, that's not a problem. Or certainly if there is an employer-employee relationship, we said, right? That's a rebuttable presumption, there cannot be a gift. And then we moved on to other exclusions, right? And we talked about employees' benefits. A lot of you are going to have access to them, and the question is, are they taxable or not? And we started with the most basic one, and that is food and shelter, right? So we said in order to exclude, for employee to exclude the value of the benefit, they have to satisfy a number of requirements. First is the food, shelter must be furnished by the employer, right? And we discussed what that means. In case of food, it has to be ready food. For the convenience of the employer, not employee. Oh, we want you to be happy, here's some food. No, 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 it must be convenient for the employer, okay? On the premises, on the business premises, 2 blocks away, we said it's too far. And the fourth requirement is applicable only to lodging, right? And it must be a condition of employment, not an option. You'd like this apartment, you like this place to live, you have to live here, okay? Not just because you want it. If you don't take it, if you don't live here, you cannot work here. Now, please don't confuse it with travel, right? When you travel, you stay in a hotel. That's a separate topic altogether. That's when you're, business-related travel, you have to stay in a hotel somewhere, employer reimburses, doesn't reimburse. We'll have a separate topic on this. This is more of day-to-day life. This is where I live, this is where I work. This is the conversation. Does that make sense? Okay, so it's very tight, all right? Then we talked about no additional cost services. And we said in case of no additional cost services, if there's really no additional cost, and when we say cost, we also talk about opportunity cost, right? So in other words, we have to be dealing with a situation of some type of excess capacity. And the examples we discussed, empty seats in movie theater or empty seats maybe in this huge auditorium, right? If some other employee of the college wanted to sit here, well, there is no extra cost here, excess capacity, right? If there is an opportunity cost, if we had to bump one of you out in order to get one of our employees in, then that wouldn't qualify. And remember, this no additional cost service is available not just to employees, but to their also spouses, dependent children, okay? But you got to keep in mind non-discrimination clause, okay? So if I tell you that only janitors in movie theaters could watch movies free of charge if there are empty seats. Is that a problem? Who says no? Yeah, we don't care about discrimination. We care about certain type of discrimination. Discriminating for the benefit of whom? Highly paid employees. So assuming janitors in movie theater are not the highest paid employees, there's no problem. Janitors could watch all the movies they want, nobody else, and they don't have to include the value of the movie ticket in their compensation. Taxable income. So you got to be clear, you know, I don't want you to jump with discrimination. No. We only care about companies, businesses, setting up special treatment for highest paid, which is, in other words, really means for whom? For themselves. Whoever's in charge usually makes most, and these people say, okay, well, if you're doing it for yourself, not for anybody else, it's discrimination. Is that clear? All right? And so the same thing is applicable to employee discounts. Same story, same non-discrimination proposition. And just to refresh your recollection, when it comes to employee discounts, in case of services, the maximum allowed discount is 20% of regular sales price, right? So if the discount exceeds that amount, the excess only, right? Not the entire discount, just the excess over 20% goes into taxable income. And in case of goods, the maximum discount is gross profit. Very good. Okay? And again, if your discount exceeds the amount of gross profit, which is the difference between sales and cost of goods sold, as we discussed in detail last class, this is just a quick review, then that excess you put into your income. And again, employees, their spouses, retired employees, fine. Dependent children are fine. Okay, disabled employees are also fine. Okay? So, de minimis fringe benefit, something that is small, right? But it's not enough to be small. Please be mindful of this too. The benefit has to be so small that it's impractical to account for. Okay? So if it's so small it's impractical to account for, then the value of it is excluded and there is no discrimination issue. So if these de minimis, minor items, so small, impractical to account for, even if only top highly paid employees could get it, no problem. Now, what's small? It's a question of fact. There's no, Congress never set up guidelines. $5, below 5 is small. No, it's just a question of fact. So it gets a little trickier. Sometimes we get into gray areas. Like we discussed last class, donuts, bagels, that's small, I think we could argue, safely. Or free water, the water cooler. But full dinner, that's not small, right? What's in between? I don't know. Sandwich? I don't know. It's a question of fact. I remember in law school when our professor taught us, that was many, many years ago, these questions. He said, well, look, it's the answer as well as I do, because ultimately it's the jury who will have to decide whether it's small or not, if there is no clear law. And you guys are jury. So your guess is as good as mine in that sense, okay? All right, any questions in the material just reviewed? Yes?
Well, on employing a business premise, it's a few blocks away is too far.
2 blocks away is definitely too far. Yeah. Yeah, that's what courts regulations held consistently. Okay? You have a beautiful homework problem on this topic, right? Which we'll talk about. Very exciting. I love that problem. Yes?
What if the home is also
Ah, you are very smart. That's the homework. We're going to discuss it when we're going to get there. I'm not going to give it up. I'll give some of you an opportunity to get credit for discussion before I share all the answers with you, right? All right, going back to the left. All of them have to be satisfied, right? For the convenience furnished by the employer on the premises, all of them. And if you're also talking about lodging, must be a condition of employment, all of them, okay? So that's one of the common mistakes on exam, by the way. And speaking of exam, please remind me at the end of the class to talk about exam, if I happen to forget, which never happens. But it may happen today. So people get excited, they pass first test, and they say, okay, that's it, it's done. No, you got to remember all the other tests, okay? All right, so any other questions on the material before I move on to bigger and better things? Yes? If it's all for miscellaneous fringe you're talking about? Yeah. Miscellaneous fringe, even if there is discrimination, we don't care about it. They could still exclude it. Now, we also talked about compensation for personal injuries. Remember that? Now, I think when you look at car accidents and other things, I think you look at it from a different perspective, right? You could give some advice to these people. So remember, compensation for personal physical injury is excluded, right? Compensation for lost wages, lost income while you weren't able to work, make money because of the injury, is generally taxable, right? You make money, you pay taxes, unless you fall into one of three exceptions. You don't need all three, just one of three. First, to refresh your recollection, if compensation comes due to physical injury. Second, from employees, taxpayers' own insurance policy, which employee went out and bought. Third, from workers' compensation policy, which we discussed what it means. Okay? So very important. And then we talked about all the variations. So emotional distress, generally if it's pure emotional, no physical element there, it's taxable. Libel is taxable. Punitive damage is taxable, okay? So on and so forth. When it comes to damages to property, we said generally compensation goes towards reducing the basis in the asset, right? Remember? It's only when the basis went up to zero, because you cannot have negative basis, the excess compensation becomes taxable income. All right. Any questions on this? Yes.
With regards to the de minimis fringe, what if it's not necessarily de minimis in the sense that it isn't a small amount, but it's still impractical to calculate?
Oh, that's your problem then. The question was, what if the amount is not small, but it's not practical to calculate it? Then you have to calculate it, track it anyway, even though it's not practical. Nobody said that it has to be practical to calculate expenses or a value you give to your employees. It doesn't have to be practical. That's why there are payroll departments being hired. It's very not practical. Okay? We're making practicality exception only when it's so small. You're not going to put the whole department watching, okay, they just had 3 glasses of water and Joe had 2 bagels. Ooh, good going. You know, you can't do this. But everything beyond that, the government says if it's not small, then you got to track it. Because otherwise, it's going to be hidden compensation, if you think about it. You know, because if I could pay you something and you don't pay any taxes, right? But it's not practical. Okay, so where do we end? How about clothing? How about breakfast, lunch, dinner? How about, I don't know, transportation? How about movie theater tickets? Flight to Florida? I mean, it's not practical. All these people are making requests, but it's your problem. Keep track of it. You want me to keep track of everything, even something so small? Okay, fine. So small and not practical, you don't have to keep track. Forget it. Okay? All right. So let's move to bigger and better things. And that's finally the moment we've all been waiting for, ladies and gentlemen, the world of deductions. Thank you so much. How do you know? Excellent. That's chapter 6. So, the world of deduction. Just to refresh your recollection, there are two types of deductions, remember? Above the line, deductions for adjusted gross income, and deductions from adjusted gross income, which is itemized or standard. Okay? So, we've kind of been doing a pretend game because we talked about deductions and this, that. But once again, as I promised, we're zooming in little by little, step by step, into individual items. So there are a few important things that I'd like you to understand from fundamental perspective. It's a fundamentally, completely different approach that we need to keep in mind to expenses versus income. Because when we talk about income, what is taxable? The answer is everything. Unless there's a specific exception for that specific item, right? In a deduction world, the answer to the question, what is deductible, is nothing. Unless we specifically said that this specific item of an expenditure is deductible. All right? Very important. So it's never 50-50. It's not unless you know of an exception. Is that clear? Fantastic. So why don't we start with above the line deductions, and we'll pick maybe a few biggest ones, and one of the bigger ones is trade or business expenditures. Trade or business expenditures, okay? Trade or business expenditures. So, first of all, before we even start discussing expenditures, we need to understand what trade or business is. What is trade or business? You know what the most amazing thing is? If you look through Internal Revenue Code and even regulations, there's really nowhere a definition of what constitutes trade or business. Okay? And it's a big item because if you establish you have a trade or business, you could deduct a lot of stuff. It's above the line, there is no limitation. By the way, which deductions are better for you as a taxpayer, above the line or below the line? Above the line, because regardless whether you itemize or not, you get deduction. There is never a floor applicable to it as a general proposition, and so on and so forth. So, huge area. So there was a lot of litigation because taxpayers said, oh, I have trade or business. Government says, no, you don't. So, once again, what do we do when we disagree in this country? We sue. So you go to court, tax court. The judge has to make a call. Okay? So after case after case, case after case, through the common law, judges came up with a three-part test of what constitutes as a trade or business. But before I give it to you, again, let's just talk it through. Let's try to develop at least part of it ourselves. If somebody tries to prove to you they're running serious, because they have to be, seriously involved trade or business, what is it you want to see first? Like, what is the most fundamental thing that you would require them to demonstrate to you? Profit. Is there expectation of making money? I mean, that's the most fundamental element of having a trade or business, right? That's common sense. Because if you're doing something, same thing perhaps, but you're not there to make money, why are you doing it? Then it's for fun, then it's hobby, and we have separate set of rules for hobbies. We'll learn them soon. But the treatment of hobby expenses is going to be very different than trade or business. You understand? So please write down the most fundamental requirement numero uno, number one, is expectation of making a profit. Okay? Good. Number two, if you want us to believe you that you're serious about business, you better be doing it regularly and continuously, right? As opposed to, I feel like ice cream. Why don't I just make some ice cream? I'll eat some, maybe I'll sell some. No, 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 no. That's not trade or business. You got to do it regularly and continuously, okay? So that's requirement number two. Regularity and continuity of operations. Okay? And number three is active participation. Has to be active participation, as in you're not just laying on the beach and the interest comes in and the royalties come in. That's not trade or business necessarily, right? Now, this is, by the way, one of the fundamental mistakes business people make in their lives. Because 99% of the people who have a business, I'll tell you a little secret, think they have a business. But in reality, they don't have a business. They just have a job that they created for themselves. Why? What makes a business a true business? Not when you work for yourself. That's a job still. You know, somebody came up and said, you know, I work in pizzeria, I make pizza, I could do it myself. How about I just open my own business? And you go out and you start making pizza. Okay, so you come to work, you make pizza, you get paid. You don't come to work, you don't make pizza, you don't get paid. Okay? It's not a business. Oh, wait, I'm going to get smarter. I'm going to hire people to do this. So somebody else, my cousin Vinny, is going to flip pizza. All right. Do you have to watch cousin Vinny? Do you have to be there? You have to check on them? Yes. Now you create a different type of job for yourself. So, okay, so you're not a flipper anymore. You're a supervisor. Still a job. So I'll tell you a little secret. After all, you're in a business school. And I think you should know what having a business means. And I don't believe in any single course you have been taught about this so far or will ever be taught. Because it's not a traditional approach to things. But then again, I don't tend to do things traditionally. So what do you think having true business means?
Having money, having leverage, and having other people make money.
If you could be completely away from your business, not on the phone, not like my buddy, we go on vacation, he's got a business, right? Oh, I have people working, everything's taken care of all across the country, great. We go on vacation, okay, I'm sitting with my wife, my kids, with his wife and his kids, and he's just phone, boom, boom, boom. He's never present. That's not a business. He just got a job. He's got a supervisory job where he gets paid much more than normal. It's not a business. If you could be away from your business for a month or two, not touching it, you have a business. Otherwise, it's a job. But we're not talking about tax purposes. I'm talking about life right now. Oh, so why are we talking about it? Can we just stick to taxes? Okay, fine. So going back to taxes, as long as there is active participation, regular, continuously, expectation of making a profit, you have a trade or business. Okay? But you need all three requirements. Again, common mistake, exam. Dun-dun-dun-dun. Oh, expectation of making a profit. Done, it's trade or business. No. Got to show all the other ones. I have a question, Professor. What if I'm in the business of lifeguarding and I only do it during summertime? Okay, that's regularly also, every summer, right? Or skiing or whatever. What a waste of money on the ski passes this season. Now in March, finally, we have snow. Okay. Any questions on this? So now, after you establish, you have expectation making profit, regularity and continuity of operation, active participation, all three, congratulations. Does it mean anything and everything is deductible now? No. Your expenses have to be ordinary, necessary, and reasonable. What's reasonable? Is table in a pizza shop worth $100 reasonable? How about $1,000? How about $10,000? It depends. It's always a question of facts. It's facts and circumstances, right? There are burgers that sold for 50 cents. There are burgers who sold for $500 in Manhattan, with foie gras and caviar and truffles, right? So it depends. That's what reasonable is. What does necessary mean? Huh? It's needed for the business. And if you don't incur it, you're gone. You're done. You know, IRS originally interpreted it this way. They say necessary means must have it or else. Right? Okay. So you go to any store, going back to our pizza shop. I don't know, is oregano really necessary? Could you do pizza without oregano? And what about cheese? Who came up with that notion of cheese? Dairy is not really good for you anyway. Right? So Congress stepped in and said, no. Because who writes the laws? Congress, right? IRS just interprets it. Or it's supposed to, actually, no, IRS doesn't interpret it. Courts interpret it. IRS just simply supposed to, anyway, enforce it. So IRS, when we say necessary, we didn't mean like indispensable. We really meant to say a prudent business person would incur this type of expense. Okay? Ordinary means ordinarily, in this type of field, you incur this type of expense. All right? So for example, I don't know. Yes? Necessary? Necessary means prudent business person would incur, prudent, as in, what's another word for prudent? Wise? I'm hesitant to equate to wise, but not dumb. Right? In other words, not a horrible business person. I don't know how many, what a percentage of wise businessmen out there. If they were wise, vast majority wouldn't fail first year and the other half in the next 5 years. So I don't know how wise they are. But it cannot be terrible, Decent. Decently good business person, okay? All right. So, you ready? Question. I don't know why I'm in the pizza mode today. Maybe I feel like pizza. So, question. So, you have a pizza business and you have a delivery and you have your delivery person, yourself, you get in the car and your logo is right out of the oven and you press the gas 100 miles an hour just to get that pizza to your customer hot, open it up, and flames still go. On the way you pick up 2 speeding tickets. Question, is this expense ordinary? No. Are you serious? You mean delivery people never get tickets? Get tickets?
They do, but they cannot exclude it.
My question is not whether they can exclude it, deduct it, or anything else. You're in delivery business, UPS, Federal Express. Do they get tickets, parking tickets, violating? Sure. Is this ordinary? Absolutely. Is the amount reasonable? Well, we could argue about that, right? Especially with the latest changes in the rates, but nevertheless, the amount is prescribed by the government, so it's got to be reasonable. Okay? Is it necessary? How else can delivery be made without a ticket in Manhattan? There's no place to park. Did you see these guys keep picking up tickets? They don't even take them off anymore. All right, so it is ordinary, it is necessary, it is reasonable. Can we get a deduction? Answer, no. Why not? Exception. Public policy. They should be deductible because it is trade or business, expenses ordinary, necessary, reasonable, but due to the public policy exception, which says, look, we don't want people to violate the laws, number one. And number two, us subsidizing the cost of them violating the laws. Because, you know, a ticket, if you get a deductible, it means government pays part of the price, right? Because the government collects less taxes. If you have extra expense to deduct, you pay less taxes, right? So the government says, yeah, they should be deductible, but due to public policy, we're not going to allow it. Is that clear? Any questions? All right. In the theme of violating the laws, you go through Union Square, and what do you hear? Smoke, 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 smoke. So let's talk about illegal businesses, because we're in New York. How can we possibly study taxes without dealing with illegal businesses, right? So before we get to drugs, what other illegal businesses are out there? Illegal gambling. What else? You read the newspaper, extortion, right? Somebody comes, knocks on the door, say, hey, you're making $100,000 a year, you got to give us 30% of that. I'm not talking about IRS right now. I'm talking about illegal way of collecting for the protection, right? Whatever it is, prostitution, whatever it is. Question. Let's think about that pimp, right, in the park. You know, they have to, what expenses do they incur? A hat, right, a cane. Payroll. Or illegal gambling. What kind of expenses do you incur in illegal gambling? Payroll. That's it? Payroll? Furniture. What else? Property, right? Rental or whatever, depreciation. What else? Bribes to cops, right? Question. Payroll. Clothing, I mean, it's professional clothing, right? Cost of whatever, alcohol, whatever. Is this ordinary? Is this necessary? Is this reasonable? Is it deductible? Yes. 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 Illegal business, your ordinary, necessary, and reasonable expenses, as a general rule, are deductible. I see a lot of puzzled faces here. Tell me what's puzzling you. Wait, Professor. Didn't you say that if it's illegal, then you cannot deduct? Well, not really. I said if it's against public policy of violating the rules where you pay fines, it's not deductible. But if it's against public policy and violating rules, but if you have a business, you're making money, you pay taxes, we'll give you a deduction. Does it make sense? Tough. But that's the rule. Illegal businesses, ordinary, ordinary expenses are deductible, of course, except somebody said bribes to cops. That's not deductible. We don't like it. That's against public policy. Okay? You running extortion, killing people, and getting paid, what's that? A hitman, right? Goes, kills people, right? Got to get the gun, right? Surveillance equipment, and got money for killing somebody, right? Cost of gun, cost of everything, it's all deductible. Okay? Now, when it comes to drugs, we hate drugs. We hate drugs. There's a war on drugs happening. Do you guys understand it? We hate drugs. So guess what? We're going to take tough stand on drugs, which means what? Your ordinary, necessary, and reasonable expenses, not deductible, except for cost of goods sold. Cost of goods sold is deductible. I see more and more people lining up outside the class. This is a cool class. I should have signed up. All right? So now you walk in Washington Square, and somebody goes, smokes, but you come up and say, you know, cost of goods sold is still deductible. All right? Any questions on this? I see a lot of puzzled faces. Why are you puzzled? I know why you're puzzled. You're just scared to ask. Okay, somebody's asking. Yes?
If it's illegal activity and income is not reported, how do they tax it?
Excellent question. I've been waiting for it. Thank you so much. How you doing? Excellent question. It's marketing students again. Question is, what are we talking about? Is deductible, it's not deductible. Who's reporting it? Nobody's going to report it, right? So what are we talking about? Ooh, there are good reasons why we're talking about. Huge reason. Number one, when you get caught performing illegal activity, whether it's illegal gambling, you know, one of your clients lost a lot of money, reported you, or you got divorced in between and your spouse reported on you, or your neighbor, too much noise and they're getting no cut out of this. All right? And when the government comes, they're going to arrest you and put you into prison for what? For running illegal activities. Is that going to be it? No, no, no. Then IRS is going to come, say,
Where's my money?
where's my money? You've been making money all this year. Did you file your tax returns? Oh, you did not. Why wouldn't you? Oh, it's illegal? But we don't care. Whether it's legal or illegal, you still got to pay taxes, my friend. You're making money. Remember, 30% to us. So not only you go to prison for violating the rules, you go also for tax fraud. And then another branch comes in and says, oh, you've been making money, then you've been hiding it, and then opened up. You know, some of you sometimes wondering, you go through certain neighborhoods in the city and there's completely empty, beautiful restaurant. But nobody's ever there. And you walk in and the people like look at you like you lose appetite, right? Right? And then all of a sudden on tax returns, this business shows millions of dollars in profits. Where do you get money? It's money laundering. About 15 years ago, I wrote an article on this that was published in NYU's Journal of Legislation and Public Policy. Separate conversation. So, you know, they have to show how they get money illegally before they post. So they launder money. So you go to prison for violating the rules, for tax evasion, and for money laundering. And we discussed before, class 1, if you remember, that sometimes it's very difficult to prove that somebody committed crime, right? But you go, you know, government does surveillance, right? And then they come and say, oh, you're making no money. Where do you get this Mercedes? Where is this $1 million yacht from? What about all those servants? All this money coming into your account, where is it coming from? Oh, I'm not going to tell you. I exercise my right against self-incrimination. No problem. You go to prison for tax fraud. That's how government puts criminals in prison. We talked about Al Capone, right? Ultimately, he went to prison because of tax fraud. The government couldn't prove anything, any criminal charges, but that's enough to keep him in prison for a long time. So that's reason number 1. There was a question. Question. Okay, so what's the answer then? I don't want to have all these problems. So at least, you know, I'll go to prison for doing criminal act, but not for tax fraud. So how about I file tax return saying, hey, I do my business, illegal gambling. Here's all my income. Of course, IRS is going to. In fact, there used to be not much communication between the governments. government entities. But after September 11, a lot of cross communication. So they're going to come to you and say, good job, you know, you're a really honest citizen. We commend you for this. But there are plenty honest citizens who are criminals and who are dishonest at the same time. Depends on which they go to prison. So what's the answer? There was a great special a few years ago I saw on television. I forget what program. And they were interviewing certain illegal business activities people. And you know what they said? They file tax returns. And they report income. And they report expenses. They just don't put extortion or prostitution there. They put consulting business. So at least there is no tax fraud. Yeah, it's misclassification of the item, but you reported all the income, paid all expenses. There's not going to be any interest penalties or fraud in underpayment of taxes. All these advices you could give to these people on the streets now, right? And charge for it. And this is not a stand-up class. I'm teaching you laws. Any more questions? Very nice. So that was the topic of trade or business activities, and also, while at it, deductibility of illegal businesses' expenses. Okay? It was interesting. While ordinary, necessary, reasonable expenses were not allowed to be deductible under drugs, right? There was a case where they were flying a lot of heroin from somewhere and the plane crashed, right? Huge losses. An airplane also. But you know, you can't deduct it. So the taxpayer tried to deduct it as, because of course they got caught, you know, ambulance came, they see all these drugs. They tried to deduct it as casualty loss. It was very interesting. I saw a hand, I think.
Yeah, I just want to ask if you could clarify the difference between ordinary and necessary again.
They're very similar. Necessary simply means that prudent business person would incur that type of expense. Ordinary means ordinarily you would find it in different businesses. But necessary doesn't need to be necessarily ordinary, right? So ordinarily, you may not, you know, ordinarily, I don't know, pizza shops don't have music necessarily, right? So it's not ordinary, you know, it's not ordinary expense. But you could say it's necessary because, you know, prudent person wouldn't hurt, yeah, why not? Especially if it's high beat music, people chew faster and get out faster. Why not?
Ordinary means on a regular basis.
Ordinary means ordinarily you would find this type of expense being incurred in this type of field. Something along these lines. I finally gave up my BlackBerry and I got this Android thing and I'm still learning how to use it. So, and it's so huge too. I just checked the time. We're doing great on time. All right, so since we addressed all the questions, let's move on to bigger and better things as always. And that is Section 212 expenses. $212. We said that for the expense to be deductible in trade or business, what is the most fundamental element we need to have? Expectation of making profit. Remember that? Okie dokie. So let's say you have it, but you're missing the other two elements, or one of them. Maybe you do the business, you expect to make a profit, but you don't do it regularly, or you don't do it continuously, or actively, usually like situation with investments, right? Okay, I do it for profit, but it's not something I do day and night or every day, right? So a question, can those expenses be deducted as trade or business expenses? No, because you don't satisfy requirements for trade or business. You need all three. And remember, if you don't fall, if you want to get out from Manhattan, you need either tunnel or bridge, otherwise you cannot get out. Same thing in taxes. You got to have some exception that tells you could deduct, otherwise the answer is going to be no. Because the default position, remember, it's not deductible, right? So, government made an exception for these types of expenses. And it's in section 212. I don't usually give you the numbers. I don't care whether you remember the number necessarily or not, but when I do give, it's good to remember. And it's deduction of its expenses from income-producing activities. Expenses from income-producing activities. In other words, it's not trade or business. You don't satisfy the requirements of a trade or business, but it's the activity where you satisfy at least expectation of making a profit. Okay? The government says these expenses are deductible. Good news. Yay. But anybody remembers how and where? From reading for today? No? No? Anybody? Not quite. You could actually have a loss. Yeah. So first of all, it's no longer above the line deduction. It goes below the line as, where is it? Itemized deduction. Okay? So first of all, it goes below the line. And not only goes below the line, but it's also known as miscellaneous itemized deduction that is subject to 2% of adjusted gross income floor. Miscellaneous itemized deduction subject to 2% of adjusted gross income floor. What are we talking about? Remember we talked about medical expenses subject to 10%, 7.5%? Same idea. First 2% of AGI, adjusted gross income floor, not deductible. The excess is deductible as itemized deduction. Now, before we get into details, I want you to appreciate big picture here. What is the big picture? Oh, I don't know. You made some money like selling ice cream. You want to do it. You're doing it for profit, but you don't do it regularly, continuously. So let's say you sold ice cream, $1,000. Sale, $1,000. And in order to make this $1,000 worth of ice cream, you have to incur some expenses. Like what expenses? Ingredients. What do you put in ice cream? Beef? No. Sugar. Let's say $200 worth. What else? Milk? Milk. $150. What else? Flavor? How much? $100 worth of flavor. Let's say that's it. Or maybe freezer, rent, whatever. Let's say that's it. So in total, how much in expenses did you incur? $450? Now, this is going to be stress test right now for you accountants here. It's going to be very stressful, I promise. Why? What are we reporting on the tax return? Did I hear it depends? It's a great answer. Often. Very often. But not always. I take it back. The true answer, it depends. So, what's the answer? What? Income from hobby. There is no hobby. You're doing it to make money. It's not that you're making ice cream you want to eat. I said because you try to make money. It's not a hobby. Hobby is when there is no expectation of making profit. You could even make money in a hobby, but there's no expectation. You don't do it for, you just like to eat ice cream. Here I said, you want to make money. Richard.
I mean, you can deduct all your expenses in full, but they cannot go above whatever you make.
Okay, I suggest, and the good thing about taxes, and the important thing about taxes, you can't rush. You know, I know as accountants, we sometimes want to kind of do things net at the end of the day. This is you have to be very methodical, step by step. So first of all, when we put things in the formula, we put $1,000 first. Is that taxable? Remember, going back to the formula, gross income. There's nothing about expenses here. There's nothing about expenses, just pure income. So we can't start conversation, oh, the expense is deductible, net, you made this much. No. The government says, look, you made $1,000, you collected, just put in income. But what about my expenses? We'll get to that. Don't worry. What do you mean? We're going to separate like brother and sister? Yeah. Aren't they like matching? No. Not in tax world. Okay? So $1,000 goes above the line as taxable income. Is that clear? All right. Now, you say, but what about expenses? What about expenses? Didn't you incur expenses? Isn't that something that we need to worry about? Okay, let's worry about it. What kind of expenses did I say these are? $450 worth. Itemized expenses, right? Itemized deductions. So, yes. Well, before we even get to AGI, if I don't itemize, what is my standard deduction? The smallest individual is $4,000, right? Unless I'm dependent on that story, right? I'm not going to itemize. I'm going to take standard deduction, which means what happens to these expenses? They're gone with the wind. Gone. Forever? Yes. Forever ever? Yes. Which means what? Which means you just paid taxes on $1,000 and got no deduction for the expenses. That's the heart of accountant. No matching? No deduction of expenses? Don't they relate to income? Not in this class. That's exciting. All right, so that's what happens. Okay? That's what happens. So in tax world, and this is the big shocker. This is the moment of conversion from accountant to a tax person. It is possible and often happens that you pay taxes on gross revenues, as you call them in tax world, in the accounting world, and you get no deduction for expenses. Okay? Now, you may be sitting there and saying, it's unfair, and the government says, well, if you really treated it seriously and made it your trade or business, then we would have given you deduction above the line, no problem. But you're really not serious about it. You really don't do it regularly, continuously, or actively, there's no participation. So what are you complaining about? Just pay taxes, go home. You got it? Gets even better. What if you do itemize? Ooh, exciting. Because we have all these other expenses. So we itemize it. Mortgage interest, property taxes. Yes, yes, yes. What's your adjusted gross income? Let's say $100,000. You can't read anything anyway, right? Today I'm making it even more complicated by writing with red pen. I don't know why I took red pen. Let's presume adjusted gross income $100,000, and we are at itemizes. Finally, you could breathe again. Okay? Question, how much of these expenses can you deduct? What is the rule I just gave you? These miscellaneous, section 12 expense deductible, how? Subject to what? 2% of what? AGI. What's 2% of AGI? What's 2% of 100,000? $2,000. How much is your expense? $450. Can you deduct them? No. Still, no deduction. Because not only government said they're itemized, they're miscellaneous itemized subject to 2%. It's just like, don't you ever do this again. If you want to do business, do it seriously, don't do it at all. Okay? Yes, sir. Good question. Does this 100,000 include this 1,000? I don't know. Let's look at the formula. How do we get to adjusted gross income? You got to go through income broadly conceived, which is anything and everything you get except for borrowed money or return of capital, as we reviewed today. Is this going to fall there? Absolutely. So AGI already includes that. The answer is yes. So you made $99,000 in salary plus $1,000 from selling ice cream. Now that ice cream doesn't taste as good anymore. Any questions on this? So how do you deal with this? From tax planning perspective, your client comes to you and says, oh my God, oh my God, oh my God. What's your answer? It's like in that Jim Carrey's movie, Liar, Liar. Did you guys see it? It's an old movie. When he was in a bad mood is the day when he couldn't lie, had to tell the truth. And his secretary like, oh, Mr. whatever his name is, your client calls. He again got caught robbing the bank for the 5th time. What can you recommend? He's picked up the phone. Stop robbing the banks, idiot. Or something like this. Same here. You want to get deduction? Do it seriously. Treat it as a trade or business. That's it. Otherwise, don't complain. Yes?
Just to make sure, so you can't itemize the miscellaneous expense unless it's more than the 2% of AGI?
Yeah. So in this particular case, if the expense was actually $2,450. So the first, so the floor means this first amount that's not deductible. So how much would you be able to deduct as itemized deduction in this example? $450. Okay? So you may be sitting there and saying, oh my God, this is sad, you know? Is there any way to deduct these expenses above the line? I have good news for you. I have an exception for you to this rule. Okay? And the exception to this rule says, and please write it down. I'd like you to know this exception. If expenses are incurred in the activity if the expenses are incurred in the activity that generate income in the activity that generates income in a form of if expenses are incurred in activity that generates income in the form of rents or royalties, rents not friends or authorities, but rents or royalties, as in you collect rent or royalty, then expenses from such activity are deductible above the line. Yes, above the line, not below the line as itemized. I repeat again, if the expenses are incurred in the activity that generates income in the form of rents or royalties, okay, then those expenses are deductible above the line. You got it? So, if I tell you you are in the business of renting apartments or bicycles, and somebody pays you income in the form of rent, right? But you incur expense like rent expense, bicycle repair, where are those expenses now deducted? Even though you don't do it regularly, you don't do it continuously, but the form of income is rent, right? So where are those expenses now going to be deductible? Like this? No. They're going to go above the line, deductible in full, regardless whether you itemize or not. That's huge. That's great. That's fantastic. Good news. People are clapping. Happy to hear it. Okay? Royalties, sometimes people are like, what is that? Well, I don't know. You did some, Britney Spears released another album and she collects royalties. Okay? Or you wrote a book or whatever. Okay? You got it? Any remaining questions? Okay, very good. Very good.